Okay, guys, we're getting it started in a minute. Just let me know if you can hear me nice and clearly. Looks like you're ready. Finally, there we go. All right, guys, what is going on? It is 5:02 p.m. on, what is today? Tuesday, right? Tuesday, August 11th. Coming at you from New York. So thank you for everyone who is able to join. This is a public live stream. We're going to go over all that good stuff with regards to Bitcoin and any other alts that you might be specifically interested in. And in a second, as long as we have good microphone feedback with regards to the audio, we'll go ahead and get it started. So I'm going to give everyone a minute. We have a good amount of viewers in here. See if anyone joins now that the stream is just starting up on YouTube. Yes, Bitcoin is moving down right now. Connected MCM, you're the last thing that I see. And you wrote up or down, but you didn't use a question mark. So I don't know if you're making a statement or if you're asking a question. It's important to use question marks. All jokes aside. Okay, give everyone a minute. Yes, Bitcoin has put in a nice move to the downside, but am I alarmed at all if we want to start the stream off on a good note? No, I'm not alarmed at all, honestly. This doesn't bother me whatsoever. If I was in an intraday position and I was long, it would bother me, but I actually am just right now being filled on the remainder of my long that I was trying to get scaled into with a swing position. So yeah, let's wait for everyone else to get into the stream and make sure that the sound is good. Is the sound good? Clean audio, good stuff. All right, cool. All right, so Gustavo, Guy, Randall, what's going on? Sky, Frog, X Factor, okay. Emmanuel, what's going on? Bron, Evan, Connected MCM, okay. Robert, and Mihail, and I think that, and Haidu, what's going on? Okay. So just a little bit of an idea of what we're going to be doing throughout this stream. We're going to obviously go over what we see in this chart right here. I know that plenty of people are probably a little bit worried right now because anytime that Bitcoin makes a large move to the downside, everyone sort of assumes the worst. But hopefully by the end of the stream, we could more or less assuage those fears. As always, on behalf of my partner and I, Josh Rager, we just want to thank you guys for tuning in to the BlockRoots YouTube. If you are joining us for the first time, thank you for joining us. Please subscribe to the channel. Click like and subscribe. We appreciate all the love we can get. And from this stream, we're actually going to be picking a random winner for $100 in BTC. Okay, so someone from the stream who leaves a comment will be entered in, and we'll go ahead and raffle off $100 in BTC. So pretty simple stuff. This is what we do often. It's just our way of giving back. So we're partnered with, I'm going to get this out of the way, and I'm sure we beat this drum many times. We're partnered with Phemex. So if you go to Phemex.trade, you could take advantage of the exchange that we put our word behind. Incredible team, incredible platform. The reason why I'm going over this again is not because I'm trying to continuously sell you on this exchange. It's because there's going to be a new feature that is being released in, I believe, what now should be this coming week. I've been talking to Max and Jack about it for the last 3 weeks. We were looking on getting it out a little bit earlier, but there were some things that need to be clarified with regards to how this function worked. It's something that they're going to be offering that is tremendously useful, especially for their contracts exchange. So as you know, on Phemex, you could trade spot Bitcoin, spot cryptocurrencies, so all these spot accounts. You could trade these with 0 fees. So for a small subscription, you get to trade without any fees. And if you know anything about fees, they can completely destroy your trading and investing performance. Okay, if you're getting in and out of trades and paying fees and jumping the spread and doing all that terrible stuff. So this tool, this order template is going to be something that's very useful for trading contracts. So for those of you that are using leverage to try to capture more upside and create more BTC, this is going to be especially useful. And I'm really excited to be one of the first people that will feature this and cover this on YouTube. And again, it is something that is available on professional grade exchanges, and that's exactly why we're going to be bringing it to Phemex, because we want to have the best exchange possible that we could offer, obviously. And when I say we, I just mean, Josh and I are lucky enough to be partners with them, but the incredible teammates that we have over at Phemex. So that aside, check out Phemex.trade. We're going to look at BTC. We're going to look at some alts. I'm going to take some questions, and hopefully by the end of this live stream, everyone will be a little bit better off. So first things first, let's just kind of get this out of the way, and then I'm going to make sure that there's nothing that's pressing as an issue early on that you guys have any questions about. So right now, what is BTC doing? Okay. So BTC is doing what it normally would do during any kind of bullish trend, which is have major corrections in order to shake anyone out that might be a little bit quick to hit the red sell button. Okay. What you could actually see is that this structure right here. Okay, and first things first, why is the structure so bullish? Well, it's bullish because we were consolidating for over 2 months and we had a very impulsive break through this structure. Okay, now not only that, we've cleared previous highs, we've cleared a previous weekly high close that was established all the way back here in 2019. We've closed through that level, we've made a higher high on the structure. So by all means, this chart has many eyes on it, and it has many eyes on it for a good reason. It's no longer just an internal thing within crypto. This is very clear that this is a very strong trend across the entire, globe of assets, or the entire spectrum of assets. Bitcoin is on the up and up. And what it's doing is what it's done in the past, which is have major corrections after the first initial impulsive move. And ultimately, what this does is shake out participants. After they're shaken out, or after we get people betting against the trend, meaning taking positions counter trend, meaning this is the trend is up. Counter trend is taking a position fading this movement and anticipating a further correction. After we get that, we trap enough seller activity at these lows so that when price moves further up, we trap them and we have fuel that takes us to the upside. So if you're on a contracts exchange and you're shorting this, you're forced to cover, and your covering comes in the form of buying. And then if you are sidelined, because that's a very fantastic arrow, right? If you're sidelined because you exited here with spot, as you see Bitcoin moving back up, you start getting that FOMO again, and we just have this sort of feedback loop that creates further momentum. So what this is doing right now is nothing that it hasn't done in the past. There are a few things that I would say to pay attention to make sure that this is something that is relatively similar to what we've seen. I'm going to make fun of myself right now and just say that when I'm doing public live streams, I notice people do this as well. There's sort of this radio voice, and you talk with this weird inflection. I'm going to try to keep it real with you guys. Should have the camera on for this, but I might be in my pajamas, right? Just kidding. But this correction right here, the one thing that I want to see with this is that any of the structure we established earlier on, so the first major move up, first major close low, I want to see that this doesn't get violated. So by violated, we don't want to see that we're starting to gain acceptance below there. I would like to see us stab into this low and reclaim it. That would be actually a sign for me that this was very, very long worthy in that regard. Okay, or rather very long worthy because of the fact that we made an aggressive move into this low, and that's sort of what's required to get a lot of people to second guess their long positions. You start breaking market structure, and then the next thing you know, you're reclaiming it, and there are signs of strength. Either that, or we just come into this level aggressively enough that a lot of participants dump their positions. We maintain this level, base out, and then continue to move upward, and then they have to jump back in the trade. Now, I use this as sort of my line in the sand. Okay, and in bullish trends, you'll get a very big move up. You won't get a retracement all the way back down to the support you left or the resistance you left, but what you will get is a very big initial dump, and you might get approaches back to that level multiple times. And the most important thing to me is that we just maintain these structures on the way up. So say, for example, that right here, this is the initial low that we put in. what we might see is that price bases out here, makes a move again, and then dumps back into this structure. And the only thing that I'm worried about is maintaining the higher time frame structure on the way up. So first and foremost, for me to keep this very simple, here's your high close. That's the highest close up there. But the initial close that we created this higher time frame consolidation within, the initial low that we made. All right, you could go all the way down to here, but I think that the more apt one to apply would be this low. I don't want to start seeing us gain acceptance back within this gap. All right, you start gaining acceptance back within that gap, and you're likely to cover the gap, which would bring us all the way back down to this structural high. So here's an inefficiency, right? Market did not have much two-way trade right here. There was a very swift response. That is a gap. So when I refer to a gap, I mean that type of gap, not a CME gap. More or less just a gap within structure where there's not much that occurred besides this very large candle. So I need to see that I would prefer to see that the lows of this structure are maintained, which means that any dump into this low, I enjoy seeing that, because what I want to do is try to get long down here on anticipation that I'm going to be filled for a lot of, in this case, I'm going to be filled for a really decent position, and I'll be able to really define my risk in a way that is favorable enough for me to put my stop down here, right, in an area where I define might invalidate this long. If that, let's say, my thesis is that this low is going to hold and it's going to lead to continuation, well, then my thesis is probably wrong if we're accepted back down here, because at that point, like I said, we're probably coming back down to the range high, which is around 10,000. I don't think this makes its way below 10,500. I don't really necessarily want it to go down there, but I don't think that this is going to be back down there. That's right at that wick right there. I ideally, and I think that this is likely going to be the case, think that we are going to be setting up off of this low right here. And why is that the case? So now that we've already let me just move my mic because it's in the way of this auto button. Now that we established the kind of structure that we need to see, and we've seen this in the past before after major moves up, right? It's expected that we're going to have a major correction. We didn't get a crazy one, right? Here's the first, after a major move up, here's the first correction. Everyone gets bullish again, major correction, but it goes into the previous low and maintains it. So we shared something on BlockRoots before, so we go to the BlockRoots platform real quick, and we'll just pull this up, and this is in our roadmaps. Should be in open content trading videos, fake out, dump, pump, continuation. So continuation is never clean, right? So this is a sort of setup that we see where you have a structure that looks somewhat like this, right? We get a very impulsive move up. We have this range that is somewhat established, right? We get a move through the high. Everyone gets long here. We get a very big dump. But what happens is price reclaims this prior range. And that is a very strong signal, right, to me, in that case, that I need to be long with my stop somewhere down here, and at least first target being the high. But ultimately, considering this has energy, and that this looks like a bullish trend, not to oversimplify it and say it has energy, but that's, it has momentum. I think that this carries through, right? So what we get is something that comes back into the low, gets everyone to be short, or gets everyone in anticipation that there's going to be a further breakdown, and then this leads to continuation. This is sort of the same pattern that we're looking at, and this happened again subsequently right over here, all right, where you had high, low, move up to the high again, dump again, even got a break above that high, all right, dump again. So the market in a bullish trend is going to try to throw people out of position, okay? That's the name of the game. If we're going to see a markup, someone wants all this liquidity. Someone wants you to jump out of your position so that they can fill their positions, okay? So even at the break of this high, something we were talking about in BlockRoots was the potential that this high could break. And why this wasn't a good risk-reward trade was because if this high broke, it still could lead to a fake out in which we would dump back down to these lows. So we shared this either yesterday or it might have been the day before. I can't remember because I just got back from vacation. That if we got the break above this, the reason why I wasn't really too anxious about longing a break of this was because we could ultimately just see a break above this high and have this dump. We actually got it before we had any kind of attempt back at that high. So I think that this is just more of what we've seen before. And if you look at this structure right here, so we have a major impulsive move up, second move up, high, move into that low, grinding towards that high, dump back down towards the low. This actually looks pretty similar to what we had over here. So move up, right here, move up, grind, second move up, dump back into the low, move up, grind at the high, dump back into the low. And ultimately, we never really lose the most important low, which is, again, sort of what I'm trying to get at, which is the first low that we put in. So the first base is how I'm going to be defining whether or not this is maintaining strength moving forward. It could dump as many times as it wants into that low. The idea is to try to shake people out of position. Another thing that's really important to pay attention to, considering where we are in likely the beginning of a trending market, is that we did get pretty extended from a very useful tool when you are trading trending markets. Bear with me, I'll be drinking my Arnold Palmer while we do this live stream. Which, for anyone who's unfamiliar, Arnold Palmer is one of the greatest golfers ever, and it is a half iced tea and half lemonade. It is delicious. So really quick, one of the tools that we provide BlockRoots members with is the Kenner and Clark indicator, and there's nothing special about it whatsoever. It's just a tool that has a bunch of things compiled into one to really help us make decisions, okay? Decision support tool. So when we are above the 20-period moving average, which I've left on this chart, the candles are going to be green, okay? When we're below, they're going to be red. So in a bullish trend, we'll typically respect the 20-period daily moving average for the entire trend. So you can see in this bullish leg, we respected the 20-period moving average. Only when we started getting major closes through it did the trend change, or was that a sign that the trend changed? Remember, it's not causation. It's just a lagging derivative that gives us some insight into where the trend sits, right? It makes it less subjective. We get an idea, a very smoothed out manner, what the trend is. So same with prior moves up, though. When you get extended from it, okay, meaning here's the 20-period moving average, and you have a move that is standard deviations above that, if you look at this and you use maybe 1 or 2 standard deviations, that's where we sit. We typically come back to that level at some point. And coming back to the 20-period moving average doesn't mean that, price has to dump down to it. All it means is that the trend has to cool off, because if we look at price action, the 20-period moving average is just, in this case, it's an EMA. The 20-period moving average is a lagging derivative. So what that means is it's actually just a compilation of the last 20 periods, and it's going to be rolling and adjusting as we move forward through time. So if price action has moved up and the 20 period is down here, okay, all that price has to do to catch up with this, or all that needs to be done for these to converge, or that needs to transpire for these to converge, whatever the proper word is for price to move sideways, right? Because at some point, sideways price action means that all moving averages are going to catch up to price, right? So if we had, bars created that ultimately meant the moving average is moving upward, well, as soon as price starts moving sideways, all the moving averages are going to flatten out. So that's how we end up meeting it. And this is actually a sign that the trend has cooled off. This represents a good buying activity. And what you'll actually see is that more often than not, on the low time frames at this 20-period level, which is right around, in this case, 11,076, we will see bot buying activity, a lot of pre-programmed algorithmic buying activity right at that level based on simple bots that are looking for retracements to that moving average. Okay, so this is one of the first buying opportunities that we have based on this very simple trend-based system. Okay, and if we're going to be entering a trending market, you should be very familiar or somewhat familiarize yourself with these concepts. Okay, so the 20-period moving average, for those of you that are using Bollinger Bands, is actually the center line of the Bollinger Band. So I have the 20-period EMA on right now, but if we look at something like a 20-period MA, you'll see that that is the center line of the Bollinger Band. So I'm going to line this up and turn it on now. So we will turn this on, and you'll see it just darken that line a little bit. That's because those are the same. So the same center line that the Bollinger Bands use in order to essentially establish the mean and to establish who's in control. So when price is above that 20-period moving average, bulls are in control. When it's below, bears are in control. That same 20 period is just a 20 period moving average, okay? And the Bollinger Bands work off of the idea that when we get far extended, we are standard deviations above, or multiples above in this case, away from what is the average, okay? So it means that price is kind of overheated, all right? So we'll see that in bullish trends, it will typically respect the upper line or the outer band to the upside for a majority of the time, but these returns back to the center line offer good buying opportunities. So hopefully these things can sort of quell or can reduce the amount of fear that you might have with this kind of sell-off. And it doesn't mean that things can drastically change, and we should always be prepared for that. But right now, it still favors the long side of things. Okay, I wouldn't start looking to short this market. Me personally, I wouldn't start looking to short it until I actually saw that we gained acceptance back within this range. It just makes sense to go with the flow of things, and right now all flows are north. So 20-period moving average, good buying opportunity right here. In terms of structure, we put in a very bullish market structure with this weekly close. So we had not had any closes above this level, and we know that, up until this point, we were dealing with these highs, right? So we were dealing with these highs and consolidating against these highs, and these are our major participation zones. Anyone who was looking to short, from a contextual risk to reward standpoint, had a great position that they could have added, in a very textbook fashion, and it would have been justified, because this was a great area to define risk if you're short, because you're saying, well, anything that's above here is probably a very obvious long. So if I'm looking to short, I want to short as close as possible to here so I can put my stop as close as possible as well. So these major swing highs within market structure, major participation zones. And that's because you have so many people that are defining their risk around these locations, defining it based on the fact that it has been resistance, so that when we overtake these levels, it shifts the participation bias of many participants. So many participants, participation bias, we've said participants or some form of it. We've been a little bit redundant with that word. But what we're saying is that if you're a higher time frame trader, okay, remember there are different types of traders within all areas within market structure. Someone who is trading, this range right here, right at the center or at the extremes, probably not the same type of participant that we have getting involved on the high time frame. Okay, if you're a low time frame trader, you can't really scale up, because at some point you're going to be causing market impact. So if I'm trading the 5-minute chart, I can't hit the bid with $10 million, right? It's going to become very obvious. My trade will be smoked at that point already. Okay, I'll have moved price. So larger traders, they require major changes in market structure, or at least us to be within close proximity to areas that they could define their positions around major market structure points or major inflection points, or, I call them many different things. If you're on Twitter and you follow me, you'll see that I'll call this an area of conditional change, or an area where there's major participation, or a contextual point within market structure, inflection point, all the list goes on. Okay, just major points within market structure. No need to get fancy. So we're above this. Okay, by all means, everything looks great. Not only did we get a move above that, we got a move above here as well. So we got the highest close in the last since 2019. Okay, so no fear. That's my point. No fear yet. There's really no reason to be doom and gloom. There's some people right now that are shaking in their boots, but again, this is completely normal. This corrected right now from the highs around 8%. And gold is actually underperforming in that regard. Gold from the highs has actually corrected a little bit more than Bitcoin. So gold has more downside capture for less upside capture. So by all means, if you're looking at these two assets next to each other, gold might be more liquid, but it is underperforming relative to Bitcoin within the last 24 hours, which is kind of it's a spurious point to make, but still something to point out. Things are looking good. So let me look over some of your questions. We'll look at some of the intraday levels if you guys are interested. My chart on the intraday, this is a public live stream. It's a little messy. It's not messy to me, but there are plenty of different levels that I have labeled. So I guess one of the ones that we'll go over, and this is probably going to make sense for Randall because he's asking, where did he go wrong? Well, yesterday we did a live stream, and I was talking about needing to define a long position if we were back above 11,900. Okay, so at that point, we're sitting over here. Okay, price is moving into the low, looking for a long position. Long position for me would have meant that we establish structure back above this level. Okay, establish some type of strength in microstructure. If we look at this on the low time frames down there right now, so let's just circle that so we know where to go to. Okay, 30-minute chart. Not exactly the type of strength in microstructure we want to see. We got the move through. Okay, but we were not able to get any kind of consistent hold above this level. And that for me was, I said that in the live stream as well, that was one of the defining levels for me. So 11,000, I think I said 11,880, 11,900. Just sort of an area for me to define my positioning, in that this is where I needed to see strength above, because this was the point of control for this day. Okay, so us being down here was a bad sign because most of the volume was transacted above us. If you think longs and shorts got in over here, better positioning is for the shorts at that point. So if we were to get back above here, I would have looked for a long. At any point from this moment on that we begin to break down, we have a previous range. Gaining acceptance into a previous range usually means that we're going to come back down to the low of that range. So here's the high of the range, here's the low, value area high. We're looking at from here to here. And for this entire period, you're probably going to come down to the low. So I don't really like to step in at an area where we don't have optimal risk reward, or where I cannot define my positioning with a very tight stop, or from an area where I could really say, okay, if the trade continues to move in this direction, I'm invalidated. So midpoint of range, not the most attractive unless we're currently in a very strong trend. This is towards the right end of a structure that is looking like it's rolling. Just not the best idea to get in position around this level. So we come down to the value area low of the structure, we lose that level, and we immediately retest it. So this is all just showing signs that it needs to move further down before it finds its base. Okay, these levels, this is the 2019 weekly high close that we overtook when we closed above it over here. Okay, this is, for example, the value area that we had moved within since the 5th. And then once we start losing this level, we go back into previous levels. So we came down and tested right here a composite value area that we had established going back all the way to here. Okay, so this right here, all this price action, even this included, this large deviation, 70% of the activity took place between 11,387 and 10,939. So that being said, on your way back down, you're going to have trouble to move it through a range, right? You're going to have trouble, rather, price is going to bounce off to some degree. Came and acted as support, retested the last area that should have acted as support, that acts as resistance. It's still on its way down, right? We're looking for signs of strength for price to base out. All it is doing in this area is having this very textbook retest of this structure after impulsively losing it and continuing its way down. So for me, I started getting into position because at any point I think that retracements in a bull market are going to be potentially, the probability will be that they'll be a little bit more shallow than they might be in sideways ranging periods, right? There's a lot of people that are looking to get in this trend. So I'm just going to anticipate that the idea that I have for price, maybe coming all the way down here, probably will get front run. So I started getting filled from here, and I still have some positions that have not yet filled down here. All right. So I've gotten filled for, I think, about, at this point, 80% of my positioning. And what I'm looking for is ultimately this to form a base right around what is a 3-week structure high volume node. So if you want to see how I got that real quick, and then we'll go into some of the questions. What I'm looking at is the higher time frame structure that we established within the last 3 weeks. Okay, and this is 3 weeks worth of structure. So high volume node, low volume area right here. Price could wick into that 10,500 level. We talked about 10.5 being a very important level. I don't think it's going to come down there, but that should be the last line that price could potentially wick into, the lowest that I want to see. Not to say that it couldn't go lower, but it's the lowest I would want to see. But this area right here, you could see that this is the point of control. So this is the point of control from a volume and a presence standpoint. So that's where we're currently sitting right now. It's an area that price was accepted for a long period of time. This was from, October, July 27th going up to August 5th. All right, so this should be a sticky area for price. It should have trouble It shouldn't just, pass through this without any kind of resistance. This is sort of an area that I would say, if you're not currently long, to look for strength in price action to build and to potentially get long. Right? Because at this point, let's say, what is strength in price action? Let's say we get a further correction. We stab at the low, and then we start reclaiming previous levels that we built on the low time frames. So something like that. Okay. Take out the low that we create. So first low, get everyone scared, take that low out, reclaim it very quickly, and we're starting to trade back above where price was last trading. So I am looking at this level right here as a major level, and I think that this should be where price is finding a good base. That also coincides with, our 20-period moving average is right around 11,070. So let me look at some of your questions real quick. So Randall, you missed the big reversal and dump because trading counter trend has burned me in the past. Okay, I was only looking to buy in the dips. Where did I go wrong? Okay, so first things first. Bull market priority is buying dips. Absolutely. Okay. You buy dips until it no longer works. Okay. It just, you want to play the law of large numbers. You want to bet on behalf of strength. And the strength in this case with this market right now is upward. What that doesn't mean and doesn't guarantee is that you won't buy plenty of dips that won't work out. Okay. So this is why you want to be defining your positions at least with optimal risk reward. So when we are, for example, I'm going to clean this chart up. When I was saying that this area, this was the range, was the area that we were accepted with. Okay, so let me clarify this really quick because I don't know if this chart is going to smooth that out. So what I'll do is I'll go to a different, I don't want to delete my drawings on the Phemex chart because I just redid them. All right, so this was the level in which price had been accepted, okay, going from the 5th, okay, up into, we're looking at around the 8th or 9th. Okay, so it's just a micro composite, a little range that we have. Price makes a move up above. This should have acted as support, okay? Any type of structure that is showing strength, what we're looking for are those little, even those low time frame signs of support holding in this case. If we take out a level, so we take out the high, we're looking for this level right here to act as an area of support. So this is a good area to put on a position, okay, and then we could define our risk easily, right? A little bit easier than, just taking this out of thin air, obviously, because you could better, I'd say, define your positioning at the low of the value area where there's a little bit more of a gap below us, because there are some important areas within here that, again, are not exactly just nothing, such as this weekly high. So let me put this on the chart too. All right. So we were looking at, ideally, this 11.5 level would have held, but we already put in another weekly high. So we already got that close through. It's not the worst thing. But what we were looking for was the top side of this structure to hold. Okay. Defining any kind of long position from here, our target would have been the most recent high if we're looking to scalp. All right. So would have been, if you're looking to scalp, that most recent high. If you're getting into position based on this being a retest, your stop placement, I would say, is going to be either 130-minute ATR or below the point of control of this prior range. Okay, so it's going to be somewhere down here. Now, if we start gaining acceptance back within the prior range, so back below into this level, like I said, it probably means that we're going to recover that range. So come from the high to the low. So it's in your best interest to be stopped out, right? To have a tight stop in this case, because what you're looking for in your thesis is this is acting as support. This should lead to continuation. The moment that we gain acceptance back within here, this is an area where price had established fair value for 4 days. It's probably just going to move sideways within the structure. We're just going to probably range again. Now, at any point in time, price is not important, right? At one specific point, price is not really that important. It's where it's being established, or where where value is being established over time, or where acceptance is occurring over time. So we know that this was an area that accepted price for 4 days, right? If we regain acceptance at this level, we're probably going to see the same mean reverting behavior. Okay, in this case, it actually just took out the low, but still, you can't just add into a long here and then anticipate that you're not going to be stopped out, because the higher probability is that you're adding towards resistance at this point. All right, if you're looking to enter into a long position and you're defining your risk off of this high, well, you're looking for a short position. You're looking for a test, maybe of that high, if that's how you're defining this position, because otherwise, realistically, in this higher time frame structure, we go to the 4-hour chart, the risk reward from that, any kind of long up here, is really something that's more like this. Excuse me. The next sticky area is still this high that we haven't tested. All right. And the area that invalidates this structure, as I said, is back down at this low. So what you might have been thinking is, yeah, I'm going to get long up here, but really the thing that defines this entire structure is somewhere down here, the proper stop placement or invalidation of this structure. So if you're going to be taking tight positions, you have to anticipate that you're going to be stopped out. All right, or you have to set yourself up for the potential that you're going to be stopped out. And that's why I like to establish these low time frame levels. So my levels on the low time frame, such as this most recent composite, okay, because in this case, since this was the level we had been respecting for 4 days, if this was acceptance through it and price was being accepted at higher prices, we should continue to see this buying activity maintained above this level and no acceptance back within. So the moment you start to see prices moving against you, That's the point. You could actually, manually just exit the trade rather than let yourself be stopped out. So it's not that there's a key metric, it's just paying attention to structure, what it's telling you. All right. I mean, one thing that you could have done is look at the structure and just say that you're going to wait for a better pullback, right? Because you're going to get a pullback, guys, no matter what. At some point, you're going to get a pullback. What we talk about in BlockRoots, before we had this major move was, that this pullback would probably occur well above the range, though. So it wouldn't be something like this, okay? It would be something like this, all right? And your pullback could be defined based on a fib, a tighter fib like a 318, or based on a pullback back into this low. You're looking for a better area to define your risk, and getting in a position up here is a suboptimal area to do it. I know that it's easy to FOMO into this, but what you're going to do is just get yourself chopped up. And then what happens is, even though there's a bull market, people don't make any money. If I went 2 times leverage for the entire run up during a bull run, would your gains eventually be eaten by funding fees? So theoretically, your funding could liquidate you. Absolutely. Annualized funding in a bull market will get exceptionally high, especially if you're trading an alt. So all you have to do is find the annualized value. And in this case, let's say that the funding is 10 basis points. 10 basis points, every, 8-hour period, or I'm thinking if Phemex it's 8 hours. On the other exchanges, I'm not sure, but absolutely funding will eat into your positioning. And I have a calculator that I made on Python that shows you negative compounding, and it's the same kind of idea. Funding causes negative compounding. So if you're going to leave positions on, that's why you use regular linear futures contracts rather than the perpetual swaps. Perpetual swaps should be used for shorter term trades. If you're going to put on a long-term position with perpetual swap, you have to rebalance it. And you have to, at some points, you might want to consider closing it out pre-funding period expiration. So that's why you typically will see a good amount of volatility before major funding periods close out, like a very high funding value. Up until that period, you might see an increase in volatility because there are people that are looking to get out of positions, and there are people that are looking to get in positions as well. This might balance out, but the idea is that you want to avoid the funding if you're long and there's a positive funding, and you want to take advantage of it if you are short and price is moving sideways enough, you could capture that. So I'm seeing a catchphrase words dump everywhere in the net. Yeah, this is not a dump. Look at this already. So this is a great response down here. And if I don't want to get into any of the complex stuff, this is stuff we go over in BlockRoots, but if we look at, not this chart, we start to look at something like this, we're starting to see that we have aggressive selling to the low. There's no really major divergences yet. All right, I'd say maybe just over here we had a sign of divergence. Okay, so this is in this case, we're looking at a volume periodicity. Gives us very clean structure. For those of you that don't know what that is, we'll just put on a 15-minute chart or a 5-minute chart even. So here's our 15-minute, which might be too high of an aggregation. So go to the 5, or maybe I'll have to even go to lower than that. We'll see. So you can see right here. So even within these lows, specifically this area right here, we have equal lows in terms of delta, higher lows in terms of price action. There's going to be a lot of aggression towards this low, and it's going to get caught off sides. So if we look at this right now on something like the footprint, and let's go to, what are we on right now? The 15-minute chart. Let's just look at, well, you could use this. I just want to compress this. So right here, what you can see, and for those of you that are new to this platform, so this blue box right here that you can kind of see right now is a little bit of a hue. This is the range composite that I was talking about at that 11,376 level. So I think it's right around there. And all I did was combine all these profiles, and we get an idea of where price was accepted previously. So over the course of this structure, since we are on our way back down and no longer dealing with this one, I'm looking for an area where we could expect a reasonable response. So it's actually at the point of control within the structure, which is good. So this is the high volume node. But what we see already at this low is there's a ton of volume into it. So we have a ton of volume right here on the left-hand side of this candle below into this wick. So what that is a ton of aggressive selling. So aggressive selling, meaning market selling. The candle actually closed above that level. And again, what we see are these imbalances at the lows in what transpires after, and now price is trading above. So all of this volume that came in, so here, 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 all of that volume is now below us. So for anyone who got short over here, they are currently underwater. So we put this positioning in pain, and at this point, this is what leads to squeezes. We'll probably get some type of more, further sideways action or second dump into this low just to try to catch as many people off sides, but I think that we'll ultimately start basing out and make a move back up to 11,700, which seems like a reasonable area to expect a good amount of interaction again. So if we just look at this, so that 11,700 level, that is the 3 weeks high volume node again, and that new weekly high close. So if you look at this on the weekly structure, it's that right there. All right, which again, that's where we've been rejected from now. That should act as temporary resistance, but I think that this is a really good buying response so far. Let's see. So for anyone who is not on the BlockRoots platform, we've just put up 41 videos on our course, and I have to load up still something on initial balance, and then the remainder of the videos that we do will be loaded onto that course. But we've gone over the volume periodicity. So each one of these candles now that we're looking at on this structure and on this structure, these candles are established by volume. So instead of looking at price based on time, we use something that requires an amount of activity to occur. So if you look at a chart that is based on time, there are periods where you will just print candlesticks, but there's really nothing that took place, right? All that it requires if we're looking at a 5-minute chart is that 5 minutes time passes. So what we'll also do is look at a volatility-based periodicity or volume-based periodicity to see that there's actual activity occurring, and this cleans up the chart a bit. It shows us very clear levels of support and resistance. So you should see right away that there are very sharp lines on this chart, all right? There are very defined pivot points. And this is a very useful chart to use. And even looking at this on this footprint chart, what you can see is now under total volume, it says that each one of these candles is printed on 5 million contracts volume traded. So each candle is only going to be printed once 5 million contracts is traded. Okay, and this is very useful because now we could identify differences in buying activity or selling activity within each candle because it is relatively standardized. Another thing that we could do is when we're looking at volume candles is we could begin to look at the range of the candles. Okay, if we are in an area of low liquidity, 5 million contracts and 5 million contracts after each other might show up as two completely different size candlesticks because there is less stickiness or less friction. If we have an area of high liquidity, we'll see smaller candlesticks because, again, all we have is a candle that's being printed off of volume, and if there's more liquidity, or there's more stickiness in this case, price is going to move less, okay, for that same amount of volume that is transacted. So just to cover that real quick, but we get into that on the BlockRoots roadmaps and in the course. Any other questions? I'm going to scroll down because I see there are some that I might have missed. Thanks for the confidence. Okay, let's see. Okay, clean audio, all right. What do we got? All right, got a bunch of comments. Up or down, clean audio, where do you put your bids, bro? I think I said it already since I went over that, so that I covered. Nice bounce off. Yep, nice bounce. 2 streams going. Yeah, I don't know why that is. Gold pulling back. Is it buy the dip opportunity? Gold pulling back. Let's see. Gold, yes, had a very extended move to the upside. I don't think that gold is going to just top off here. I think that we will get a good pullback somewhere along the lines of maybe going back down to 1600, 1700 even. But I think that this trend resumes. I think that the underlying macro factors that are at play are not just going to reverse overnight. And that this is ultimately the effect of these macro changes that are occurring. When you have this is obviously, this chart is highly correlated to the dollar. And right now what we're seeing is an inflation macro play that is taking place and a speculative play as well. Okay, or rather traders taking advantage of the fact that this is in this case, this is a hedge against inflation. All right, protecting themselves with hard assets and things like precious metals. So I think that this is maybe not necessarily the buying opportunity right here. I'd wait for gold to form more of a base than just buying at the first pullback to what should act as higher time frame support, right? Because this is the structural high that we were sort of defining the breakout around, and we got that very impulsive move through. But it is entirely possible that we continue to move sideways, correct through this level again, and I'd rather just see that a base is starting to form, something along the lines of, you can even see that in the past, we've done this before when we overshot major levels within market structure, going all the way back to the 2006, 2007 level. Okay, this is actually at the end of 2007. We get a major move through, and we get an impulsive correction right back into this cluster. So that's really what I would look to see form before starting to identify in the low time frames maybe where is a better place to get in position. So first, major correction, some type of structure on the weekly that is showing that this is beginning to consolidate, and then identifying on that weekly structure on a more refined time frame on the daily or on the 4-hour. But I'm not trading gold right now, but that's just how I would go about doing it. Okay, revert to 618 fib in the daily fills, the nice gap. Entering BTC raffle, yeet, 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 skeet, skeet. Yep, okay. Getting study not auth. Okay, so Manuel, all you have to do on Discord is type me in your TradingView name, and I'll go ahead and add you to that. There's also the alpha trend following algo that you can have access to, decision support tool, and all that stuff. So what point do you put on the long? So if we're talking about BTC right now, I should be, let's see, did I get my lowest fill? I think my lowest fill is going down to 1170 now. So I am, I think at this point, 80% filled in terms of longs, and I'm probably up right now because my initial long positions, I shared these on Twitter, my bids initially, let's see, rather than blow up my Phemex account with my email, my initial long positions, here we go. So I'm definitely filled with this already. So initial long position was at 11,275, 11,263 is filled, 11,241, 11,217, and then I've actually already added after this. I've added to this. So I have orders that are down below 11,100. So I think I have 1 or 2 orders that are still left down there. It's fine if they don't get filled. I'm already filled for a pretty substantial position. And these are definitely filled now. So I'm definitely up right now, because the last time that I was up, I actually shared this screenshot, and we were, well, you know what, I'm less up than I was here, but I have more of a position on, so I'm actually probably a little bit more up. Okay, so poor lows now though. Let's look at that. Yeah, so one thing I just said, and that's why I don't know if I am not catching these comments, as there's no timestamp for the comment, but what I said was we'll probably dump back into the low. One more stab at the low, clean this up, and really good point. E45 pointing that poor low out. So for those of you that are on the stream that don't understand, when we have 2 TPOs at the bottom like this structure, and we don't have something like this, what that indicates is the market was able to come into this level and consolidate or spend more than just a brief amount of time into it. Okay, so this is a buying tail, and this is a sign of excess. And what this says is that when the market came into this level, there was a very swift response. When we have the market that was able to spend 2 periods in this level, what it says is that there was not an immediate buying response. And poor highs and poor lows, what they often represent, are good areas to potentially take advantage of breakout trades through, or to look to clean up with a stop hunt. So at least a stop hunt. So this is definitely going to be a target moving forward. And this is, just a good insight into how what we're teaching on BlockRoots, which is what we're trying to do when we're looking at a TPO chart is identify further areas, or rather, potential opportunities based on what we're seeing within the structure that's forming. So right now, one of the things we would point out is, okay, if we're just stepping into the structure, let's say that we have this daily close out, and then we open up another daily structure over here. All right, what are we looking for as a potential area to get involved, or rather a potential area to get involved? Well, maybe longing a retest of this level to clean up this low, all right, and then return back upward. So yes, that is something good to point out, because what this says is that there was not an immediate buying response, and that's exactly what we want to see. Even though it does look like that, this is just based off of the TPO chart. Okay. They have a Discord sign up and then DM your Discord name. Yep, Lucas, cool. Was kind of weird since we beat that HVN of the last up move to 12K, but I guess we filled that sell tail, filled the tail, yeah. Had that point at 11.9, lots of resistance there in the past, and again, yesterday couldn't punch through it. No, you know what? Everyone gets very excited when the market is on the up and up, but in the back of our minds, we should always be looking at what has occurred in the past. And in the past, we've had not just one major correction before continuation. I say continuation is never clean. Yesterday in a BlockRoots live stream, what I said was, I think that this could play out something like this, because this structure looks pretty similar, right? Okay, where now this is more of the consolidation. This is the consolidation. We get the dump into the low. Now, contextually, this is a different structure, because what we have to do is remember that this was occurring into higher time frame resistance. This was pre-break. This is post-break. This up here is with a whole lot of confidence and now a whole lot of buying interest. This was still with hesitation, and this still took a long period of time before marking up. I think that if these two transpire in the same manner, that this is sort of a scaled down version of that, which could just ultimately yield a structure that looks, something. I hate to even draw, because every time I draw, my mouse moves too much for my drawing that I want, and I make something stupid that I don't want you to take literally. But I think that this could just take a little while longer, right? This could go into September, okay? It absolutely could, and it's very easy. Me and my goofy laugh. It's very easy to always assume that continuation is going to be a lot sooner, right? Okay. Can you look at delta bars? Hold on one sec. Okay, I'm reading. Some of your comments are coming up and then pushing the other comments down. All right, so delta bars is looking super bullish. A lot of buying liquidity being provided. Buy liquidity being provided. Price is lagging, creating a divergence. Okay, let's look at this. Hopefully it's not passed already. So 5 million delta. Okay, so each one of these candles being printed based on 5 million in delta. So if we look at this actually with volume as well, it's super useful. So now we'll have to zoom out because the footprint chart doesn't make it very friendly to scroll. So looking into this low. So I mean, you have a ton of volume that's taking place or that's occurring into these lows. One thing that is bullish about this, I guess you could say that obviously is bullish, is that we have a ton of this volume into the low, but price has obviously at this point not broken down, and then we're seeing a good response out of this low. So specifically looking at these being created off of negative delta, we're starting to see that buyers are coming in, and that hopefully we'll see a turnaround in buying activity with delta and volume increasing through this low. But we already got it. So that's actually already occurred. So I hate to do like a hindsight analysis of this rather than paying attention to this in real time. But yes, in this case, we're seeing that also not only is there a lot of volume coming in, but the range of price movements to the upside is favorable, right? So we're seeing a whole lot of. I guess the one thing that I would point out is that there's less of an inclination at these lows off of this rebound to offer price, meaning what we're seeing is that bears are less willing to passively sell this off of this low, which is a good sign, right? Good sign, because ultimately that's what we want to see. We want to see passive buying and absorption at the low. Filling the CME gap. So I don't think that the CME gap needs to fill. They do fill more often than not, but it doesn't need to fill, especially since it's a breakaway gap. Doesn't need to fill. Evan, yeah, we gave a free trial for Discord. We do it periodically. Extremely strong. If anyone wants to, here, you know what we'll do? We'll give this out again. 1 second. Invite people. All right, so if you go to this link that I'm going to send in the DM, okay, you'll be able to see a few of these pages. You'll be able to go into this trial area. All right, I'm going to get rid of these messages in a second. You'll be able to go, oh, Sabrina, let me add you. Okay, you're added as a visitor, cool. You'll be able to go here and type in trial, and then I'll go ahead and grant you a 2-day trial. And then, you know, from here we have a bunch of different categories, all of our market updates, our live streams that we do 5 days a week, literature, very useful order flow resources, market profile resources, YouTube videos, all that stuff. So if you want a trial, go ahead and I'll gladly give you a trial. So Red Will, my name's not Josh, it's Ryan. Josh is my partner. Josh and I are the co-founders of BlockRoots, and he did the video yesterday, and my name is Ryan. I'm Cantor and Clark on Twitter. Okay. Let's see. Thanks for the thanks Superphotos for the feedback. Would you put up a conditional market buy at 12.12? Thanks, Frog. Of course, Dave. Delta bars on H4. Okay, so you're looking at them on the H4. Huh. All right. Okay. Yes, the trial does. No, the trial does not include the courses. Sorry. Okay, so let's look at. I think one of you wanted to look at Link. Right. Okay, so Link always holds up. Right. That Link is just a very strong asset. So Link against BTC. Okay, this is what you want to see if you're in Link. You want to see that against BTC it's holding up. Right, just think about this as the exchange rate, and right now this is showing dominance in the pair. So by all means, if I was looking to long Link based on this chart, you could reasonably say that, hey, at this point, longing Link with a stop below here, or even a tighter stop below here, there's a reasonable case for that. I don't know if I think the better case would be, let's see, this is the midpoint of the range. So midpoint of the range in a trending market is not a bad place to get into position, but when we're approaching it from above. So you could see that here's a high, price breaks down, retest this again, deviation breaks below, retest from below, retest from below, retest again from below. We definitely know where there's a very clear level within price or within this chart, and that seems to be this, 11.5167 level, okay? So you could see that is pretty much on the 30-minute chart. It's very clear where that level is. So for anyone who's following along, it's where we're finding resistance the most. So if I'm looking to long this, I want to long it with the sign that momentum is picking back up. I want to see that we're above this level. We have 1, 2, 3 rejections since the last time that we deviated above it. But 1, 2, 3, 4, 5, 6, 7 rejections overall as resistance. We start turning this into support, and this could potentially be another breakaway play. And Link, by all means, the thing that boggles my mind, and it'll boggle yours too after you become you really grow in terms of experience and just have more time at the screens and progress as a trader, is that when you have a strong uptrend, people are just adamant about trying to call the top. It doesn't make any sense. Just buy the strength. Just take the longs. Take as many as possible until it doesn't work anymore. Rather than try to play it like a hero play and catch the top. It doesn't make any sense. So Link is looking really strong. Link, the problem with Link is that if you're not putting on these short scalps to define your position based on the higher time frame, it's not the most attractive, right? Because at this point we're pretty extended from an area where you would put on a higher time frame swing stop, right? It would have to be somewhere down here. Or within here, but still this could correct into here and still continue upward. So it's very extended right now, but it is still strong. It probably still can move up from here. I could see a $20 Link with no problem. Okay, let's see if there's any other questions. At what price point do you become bearish and start shorting instead of buying the dip? So, good question. Great question. There are a few points on this chart that were very important for this trend that we're currently in, right? So most importantly would be the higher time frame resistance that we were under, I think, going back into June, May, February 2020, all the way back to November 2019, and then to the midpoint of this 89-day or 88-day range, going back in from May, July or June to September 2019. So this to me is a really important level. The way that we took out this level, very impulsive, major participation zone again, major level within market structure when you're looking at the daily and the weekly, right? So this defines the bias of many traders, okay? And this might sound stupid, why you're saying, why does it matter that it defines the bias of other traders and not you? Well, because we are just one big pool of participants, and you want to go with the flow. So now when we have a market that clearly sees the flow is, or the market is bullish, flows are to the upside. It doesn't make sense to take counter trend trades until the trend has changed again. So for me, I think that price could wick into 9.6, still rip back above 10 and be completely fine. And, if anything, Bitcoin has done crazier things. The last thing that we want to do is see that price comes back down below 9.9, 10,000 and starts gaining acceptance back within this range. So when I say acceptance, what that means is that there's no very immediate response, or there is no immediate response by buyers to bid this back up outside of this level. So the moment you start gaining acceptance back within a range, the range play starts taking place again. The same thing or the range priority, The same thing that I was just talking about when I was saying, well, why I was defining a long around this level is because this was a previous range that we were within. Now, it might not be the kind of range that a lot of other traders chart, but what this was a distribution through time. Okay, from the 5th to the 10th, this was the area where we spent 70% of the time. So rather than focus on where price was at one or two swing points, why not look at where price was accepted by buyers and sellers the most? Now, when you leave that level, it's an imbalance. And an imbalance or an impulse out usually leads to a new consolidating level, but at a different price point. Okay, buyers and sellers are accepting a new level to the upside or to the downside. The moment that you start gaining acceptance back within a range, whether this is on the higher time frames or the lower time frames, price just falls back into a previous fair value accepted level. And we start to see this mean reverting behavior again, okay, where you have, again, the low, the high, the midpoint as a sticky point. But you'll typically see that once we not only, violate, but gain acceptance back within. So just think about acceptance. If you want to oversimplify it, and we won't go into order flow, how we look at acceptance. Think about acceptance as, your 1 hour candle, your 4 hour candle, an indication that we're not leaving this level fast. Okay. What you should do is remember that price doesn't have any idea that it's on a chart. Okay. Price has no personality. It doesn't know that it's creating a candlestick chart. All this is showing us where price was over time. All right. The fact that when we look at a candle that has a large wick, or when we look at a TPO chart, which is based on time, when we see a very skinny tail, either to the upside or to the downside, we'll open this up and find some that are within here on the daily, something like this. This tail tells us that price did come into this area, but it didn't spend much time at all. Okay, what that means is that this was a buying tail and that the opportunity of discounted prices was taken advantage of. So again, I like to use, the idea, and it's not me. I don't want to say that I like to use this analogy or this example like I take credit for it. It's something that James Dalton even did with a different example. I think he used cars. But if I had iPhones for sale, and let's say that the current fair value price, so here is a range. This is the distribution over the course of a few days. This is the point of control. That's the highest volume level that price was, rather where price spent, where the most transactions occurred, whatever you want to call it. This is where the most volume occurred, participation, however you refer to it. This is fair value at the midpoint. All right. So fair value is where buyers and sellers are in agreement, right? The market determines this level. The market's never wrong either. So if we have an iPhone that is $1,000 and that's fair value, if we drop the price of the iPhone to, let's say, 500, what do you think is going to happen? All right. This is probably not going to spend much time at 500. If we have a limited supply, let's say we're offering 10 iPhones at $500, what's going to happen? It's going to get bought up immediately. It's going to return back to fair value, or at least it's going to leave that 500 level. The opportunity is going to be taken advantage of. It's going to be taken. So this is the same thing with price. When price drops in value, if it really is to be valued at higher prices, then any kind of discount should be taken advantage of very quickly. The market should respond according to how you would respond if something was discounted, right? If you really wanted something and it was on sale, you're going to buy it as fast as possible. So this is the same idea based on, the idea of presence or how much time we've spent in an area. So for me, I wouldn't want to see that price is gaining acceptance back within a prior range. So this range down here, we've already defeated that. Okay, we left it impulsively. There's an imbalance. Buyers took over. Okay, now we're having agreement higher. The last thing I want to do is see that we gain acceptance back within this level, because what that ultimately does is it opens up this 8,900, 8,700, this general area again. And no matter how much you don't want to hear that, it just becomes very lower prices for Bitcoin beget lower prices, higher prices for Bitcoin beget higher prices. Okay, when you lose major structural levels, you tend to, you might take a while to travel from one point to the next, but more often than not, you cover the distance. It becomes very self-fulfilling because you have so many traders that are trading on behalf of structure that everyone knows that if we're, let's say that this was, the previous, here, wait 1 second. Let's say that this was a previous range we were within, and we, boom, take this range out. I like the sound effects, right? If we come back to this range and it doesn't act as support, and then we fall back within it, everyone who's looking at this chart knows that this is now resistance and this is high time frame support. So what's their incentive to get into position here, right? Or I don't know why I'm doing that as if it's a crosshair. What's their incentive to get in over here, right? Not that much, because at this point, this is your risk, this is your reward, right? Meaning that your new resistance and your new target is above you because we lost it, and your new support is below you. So it doesn't make sense. A lot of excuse me, not that it doesn't make sense. People are less inclined to step in the way of this until it comes to an area where they could more cleanly define their position, where they could I guess reasonably expect should act as support. So that's the same way that a lot of these gaps work as well. If there's a gap close by and we're on our way down towards it, there's less of an inclination for anyone to step in the way of price action to slow it until that gap is filled. So people pull their bids. Okay. Let's see. Thanks, Dave. Appreciate that. Dave's one of our best members. All of our members are phenomenal, but Dave is a close friend of ours. Okay. Too many programs out there. LRL. Yeah. There are a lot of programs out there, and there are a lot of great programs out there that aren't BlockRoots as well, right? You have to find the one that really fits your style and your needs. So, there's some phenomenal traders on crypto Twitter, and you could learn from more people than one, and you should. How useful is the fear and greed index during the bull market? I wouldn't really look at the fear and greed index for crypto. I feel like you get a really good idea of what that is by just being on Twitter. I don't really look at it for crypto. What do you think about Hex? I don't know really anything about Hex, so I don't have an opinion on it. Yeah, Josh knows about it. I don't. Kava. Let's look at Kava. So Kava, SXP holding up. Here's a good sign. Alts are holding up. So right now, what we don't have is a market that is kind of just playing musical chairs. And by that, what I mean is We don't just have capital leaving one asset and going into the next. We actually have a case where the entire water level in this case is rising. All right. So the fact that alts are not just completely dumping right now is a really strong sign, because what this does tell us to some degree is that Bitcoin has gunpowder left, right? If it needed to, we could see a good amount of inflows come into Bitcoin that end up supporting it if there is a major correction. All right. And this is not the same as it was years ago when all roads led to Bitcoin. But the fact that the market isn't just dumping is a really good sign. This is a really healthy market right now. Actually, if you look at skew correlations right now, for some cryptos are near zero. So let's go to macro, I think. That should pull it up. Oh no, this is going to be correlations between macro assets. So let's see. Spreads, maybe. They don't list it. Okay, so here's our 1 month correlation matrix. And we can actually see that, so this is, it's going to show you on this axis the assets, and then this the others. And if you cross-reference these, you'll see the correlation between both. So if we look at something like BTC, obviously it has a 1 correlation to BTC. If we look at BTC to something like Link, there's a slightly negative correlation. All right. So in this case, you have BTC selling off, or BTC putting in underperformance, Link putting in a lot more performance to the upside. Positive correlation means that they're going to be moving with a positive relationship. Oversimplification of that, because I don't want to talk about it as if it's covariance, is that when Link is going up, positive correlation between Link and BTC implies that BTC will go up as well, right? Or that when one goes up, the other can be observed to go up as well. So what we actually see is that the market has between BTC, there are a few assets that are near, such as Binance and ADA, zero correlation, all right, which is, very low. So 1 would be the most positive, -1 would be the most negative or inverse correlation, and 0 would be flat, meaning neutral. So there's actually no correlation almost between ADA and actually Binance, excuse me, I thought that was lower. So ADA, very low. Link, extremely low. It's negative, but again, it's 0.04. All right. So this is a really good sign. Okay. We have assets that are moving independently of each other and that are holding up. So I think this is just more of sort of the details that we like to pay attention to, that we do forget to pay attention to when the price is just moving up. Even I notice it. I become more focused on low time frame structure and market structure and what's going on the within order flow and TPO, rather than paying attention to things like skew and all of that, because the trend becomes very clear at that point. Only during consolidations do you start to look for evidence to confirm what you think might be. But right now we have all the the signs that the market is very healthy. Do you use RSI? If yes, which time frames? I don't currently use RSI, but I think it's a very valuable tool. I think that, when you use RSI, you're trying to, again, see what you can't see with the naked eye, which is momentum. So when I look at RSI, I see what's going on in price action already. So if you're looking at RSI and we see something like this, for example, so look at BTC, and it looks like we have a high in momentum, a high in price action, and now a lower high in momentum and a higher high in price action. So the RSI is a 14-period rolling period if you're using its standard setting, okay? The only way that the RSI wouldn't paint divergences is if price just continued to accelerate at an increasing rate to the upside or to the downside if it was, in the opposite case. So this is just going to show us what price is already showing us, which in this case is just momentum has slowed. And if we think of how this is calculated, it's based on the 14 periods prior. Well, why is this one so high compared to this one? Well, that's because this major move was part of what is incorporated into this formula, or rather what is incorporated into this calculation. So the major move is going to yield a much higher spike. And for RSI, after you have a period of sideways price action, any little bit of change is going to throw the RSI to the extreme. So very tight price action like this, it could have been a $200 move and the RSI would have jerked upward. All right, if it was to the downside, it would have been the same thing. It doesn't necessarily mean that you should say, okay, this is overbought. It has to correct. It's just a cause to pay attention. I'd say the RSI is a good tool to say, puts out a warning shot or a flare, right? When the RSI is overbought the first time, start paying attention to it. When it's oversold the first time, start paying attention to it. You know, the daily, the weekly chart, anything lower, I don't really think I need to use it. But it's a very valuable tool. I just, I don't incorporate it as much as I used to. So I think we're about an hour and 14 minutes into this. I don't know if there's any other questions. Otherwise, we're going to wrap it up. Let's give you guys a second. Everything right now, ETH obviously, nice little correction. Still not worried though. ETH a bit more extended than BTC though, right? So we have to keep that in mind. ETH will probably outperform to the upside, but the downside of that is the downside, right? ETH is a higher beta asset. It's going to move more both to the upside and to the downside. So I think that covers it though, guys. We are, guys and gals, XRP against USDT. Last one. XRP is late to the party. So from a structural standpoint, this is starting to do what I would want to do if we were, for example, looking at this. So normally what I do when I'm looking at an alt is I start looking from this standpoint. So from the structure based on the weekly. So there is our weekly close, right? The weekly low, you're just trying to get the, in this case, the most confluence between weekly structure. So what you can see is right at, what are we at? 27 cents. This is, what's it called? This is the USD chart. You said USDT, but I think, you know, it's completely fine to use the USD. It doesn't make a difference. But this is the low that we put in after this major move up, the lowest low that we put in, going back to 2018. Respected this level going into 2019. Lost it, started treating it as resistance. If I was at this, if you asked me back here, where would I buy as we were breaking down, I would have said down here. But now since we're up here, this is the area that we're actually looking to act as support. And if XRP maintains this level, so just look at this zone, right? If XRP maintains this sort of 28 cents level, and I'd say it probably goes down a little bit below that, but the idea is that we build structure back above a previous support. If we're able to maintain this, XRP is going to probably put in a really big move to the upside. So I'll just say that I don't really care too much for XRP fundamentally, but it doesn't mean that it won't trade. In which case I'd probably be looking at 50 cents, 48 cents if we maintain 27, 28, 29, this level right here. Just because that was a very significant level in the past. And now it looks like we're retaking it after flipping it and turning it as resistance. So support, breaks down, resistance, breaking above, and gets too big. You get the idea though. Support for a long time, break down, resistance, resistance, breaks down. Market reclaims past the most recent level, strength in microstructure showing, impulsive move up. Now you want to see that this is maintained, and then you're looking up here initially. Okay, so I think that covers it. One more thing, the Puel multiple. It's a Puel multiple. I don't know if I've ever heard of the Puel multiple. No, I don't know the Puel multiple. It must be something that is only for Bitcoin. I know all the other important financial multiples and ratios, but Puel multiple. Oh, I already said, yep, it's a Bitcoin thing. Daily issuance of Bitcoins and USD. No, I don't look at that, so I don't have a comment on it. I'll have to look it up. Do you trade silver? No, I don't trade silver. Nope. But that covers it, guys. I think it is an hour and a half into this. It's been a great stream. Hopefully, it's been great for me. I hope it's been great for you. Everyone have a fantastic evening. Remember, use that link that I put in the chat. Sign up for a trial. Be happy to have you. And then I will go through the comments after this video, and we'll pick a winner for the $100 in Bitcoin. Until next time, guys, everyone have a fantastic week.